Good morning, forex traders. Today's trading environment is shaped by a confluence of factors: the ongoing strength of the US dollar, USD, amid Federal Reserve policy uncertainty, mixed economic signals from Australia and New Zealand, and shifting global risk sentiment driven by geopolitical developments in the Middle East. Our analysis reveals that NZD/USD remains in a bearish technical trend but is approaching oversold. NZD or USD, Australian dollar to US dollar, and NZD, AUD Today. These drivers set the tone for intraday volatility, liquidity, and trend direction, and failure to account for them can lead to misaligned trading decisions. 1.1 US dollar index, DXY, the dominant force. The US dollar index, DXY, which measures the USD against a basket of major currencies, is currently trading at 98.219, reflecting a modest rebound amid lingering uncertainty surrounding Federal Reserve, Fed, monetary policy. Recent comments from Fed officials have highlighted a data-dependent approach to future rate cuts, with market expectations now pricing in a 50% chance of a 25 basis point cut at the June FOMC meeting. This uncertainty has kept the USD supported, as investors seek the relative safety of the greenback amid geopolitical tensions and mixed global economic data. For intraday traders, the DXY's movement is a key correlation factor. A stronger DXY typically weighs on both NZD/USD and Australian dollar to US dollar, while a weaker DXY can provide a tailwind for these antipodean pairs. Today, we expect the DXY to trade within a range of 98.00 to 98.40, with intraday volatility likely to pick up during the London, 8 to 4 p.m. Greenwich Mean Time, and New York, 13 to 9 p.m. Greenwich Mean Time, trading sessions. 1.2 Antipodean economic context. Australia and New Zealand, as commodity exporting nations, are heavily influenced by global commodity prices, domestic economic data, and central bank policy. For Australia, the Reserve Bank of Australia, RBA, has maintained a relatively restrictive monetary policy stance, with interest rates currently at 3.6% after 3 rate cuts in 2025 to combat persistent inflation pressures. Australia's economy has been supported by strong immigration inflows and resilient domestic demand, helping sustain housing activity and economic growth. Today, there are no major Australian economic data releases, so AUD movements will be driven by USD strength, commodity prices, particularly iron ore, Australia's top export, and global risk sentiment. For New Zealand, the Reserve Bank of New Zealand, RBNZ, has adopted a more dovish stance compared to the RBA, having cut its official cash rate, OCR, 9 times from 5.5% to 2.25% between 2024 and the end of 2025. This has created a significant yield advantage for the AUD over the NZD. New Zealand's economy faces a more fragile recovery, with recent data showing modest growth and lingering inflationary pressures. Like Australia, there are no major New Zealand economic releases today, so NZD movements will be tied to USD dynamics, agricultural commodity prices, log, wool, and spillover effects from AUD/USD. 1.3 Global risk sentiment and commodity prices. Global risk sentiment is cautiously optimistic today, supported by progress in US-Iran negotiations and a ceasefire in the Middle East. This has boosted demand for risk-sensitive currencies like the AUD and NZD, though gains are limited by USD strength. Commodity prices, a key driver for antipodean currencies, are mixed. Iron ore, Australia's top export, is trading flat at $120 per tonne, while agricultural commodities, New Zealand's key exports, have seen modest gains, with wool prices up 0.3% and log prices up 0.2%. Intraday traders should monitor commodity price movements closely, as sudden shifts can trigger volatility in Australian dollar to US dollar and NZD USD. Additionally, any developments in the Middle East or US-Iran negotiations could alter risk sentiment, leading to rapid price swings in all three pairs. 1 point for intraday liquidity windows. Liquidity is critical for intraday trading, as it ensures tight spreads and efficient execution. For the three pairs covered in this report, the key liquidity windows today are Asian session, midnight to 8 o'clock Greenwich Mean Time. Moderate liquidity, with activity driven by Australian and New Zealand traders. NZD AUD tends to see the most movement during this session, as it is a cross between two antipodean currencies. London session, 8 to 4 p.m. Greenwich Mean Time. High liquidity, as European traders enter the market. This is the most active session for all three pairs, with the highest volatility and tightest spreads. New York session, 13 to 9 p.m. Greenwich Mean Time. High liquidity, overlapping with the London session until 4 p.m. Greenwich Mean Time. This overlap, 13 to 4 p.m. Greenwich Mean Time, is the optimal window for intraday trading, as it combines European and US liquidity, leading to increased volatility and clear trend movements. Traders should focus their activity during these high liquidity windows to avoid slippage and ensure that their entry exit orders are executed at the desired levels. 2. Pair-specific analysis, NZD USD 2.1 current price and key levels as of 6:26 Greenwich Mean Time on April 20, 2026. NZD USD is trading at 0.5860, with a daily range of 0.5846 to 0.5887, a slight decline of 0.3910% on the day. The pair has been in a sustained bearish trend since late March, when it broke below its 100-day moving average, and remains technically weak despite approaching oversold conditions. Key intraday levels, GMT's support levels, 0.5846, intraday low, 0.5830, previous swing low, 0.5800, psychological support, 0.5736, recent low, 0.5723, Bollinger Band lower bound. Resistance levels, 0.5887, intraday high, 0.5900, psychological resistance, 0.5920, 20-period moving average, 0.5950, 50-period moving average, 0.6007, Bollinger Band upper bound. 2.2 Technical analysis. Market Meridian's technical analysis framework combines multiple timeframes, 1 minute, 5 minute, 15 minute, and 1 hour, to identify intraday trends, support resistance levels, and momentum signals. 1 hour timeframe, NZD USD is trading below its 20-period, 50-period, and 100-period moving averages, confirming a bearish intraday trend. The Bollinger Bands are narrowing, indicating decreasing volatility, with the price trading near the lower band, 0.5723, and showing signs of a potential technical bounce. The MACD indicator shows a difference of -0.0030 and DA of -0.0026, with a negative histogram, -0.0007, indicating bearish momentum but with the potential for a bullish crossover if the histogram narrows. The RSI, Relative Strength Index, is currently at 36.3954, approaching the oversold threshold, 30, suggesting that a short-term rebound may be imminent, but no clear reversal signal has been generated yet. 15-minute timeframe, the short-term trend is bearish, but momentum is weakening. The price has formed a series of lower highs and lower lows, but the RSI is showing a bullish divergence, price making lower lows, RSI making higher lows, indicating that the bearish momentum may be fading. The 20-period moving average is acting as dynamic resistance at 0.5870, and a break above this level could trigger a short-term rally. 5-minute time frame. The intraday chart shows choppy trading, with the price oscillating between 0.5846 and 0.5887. The RSI is neutral, 42, and the MACD is flat, indicating a lack of clear short-term direction. Traders should look for a breakout above 0.5887 or below 0.5846 to confirm the next intraday move. 2.3 Fundamental drivers for NZD USD today. As mentioned earlier, there are no major New Zealand economic data releases today, so NZD USD movements will be primarily driven by a USD strength. The DXY's movement is the most significant driver. A rise in the DXY above 98.40 will likely push NZD USD below 0.5846, while a decline below 98.00 could trigger a rebound towards 0.5900. Commodity prices. New Zealand's key exports, logs, wool, have seen modest gains today, providing minor support to the NZD. A further increase in agricultural commodity prices could boost the pair, while a decline would add to bearish pressure. Global risk sentiment. Cautious optimism in global markets is supporting risk-sensitive currencies like the NZD, but gains are limited by USD strength. Any escalation in geopolitical tensions could lead to a flight to safety, pushing NZD USD lower. 2. For intraday trading strategy for NZD USD. Market Meridian recommends a two-pronged strategy for NZD USD today, focusing on breakout trading for trend followers and range trading for scalpers, with strict risk management parameters. Strategy 1. Breakout trading, trend followers. This strategy is designed for traders who want to capitalize on the ongoing bearish trend, with a focus on confirmed breakouts below key support levels. Entry, short NZD USD when the price breaks below the intraday support level of 0.5846 with a 5-minute close below this level. Confirm the breakout with a surge in volume, at least 20% above the 10-period average volume, to ensure it is not a false breakout. Stop loss, SL. Place SL 15 pips above the breakout level, at 0.5861. This ensures that if the breakout is false, losses are limited. Take profit, TP. Set TP at the next key support level, 0.5800. This provides a risk-reward ratio of 1 to 3, 15 pips risk, 46 pips reward, which is consistent with Market Meridian's risk-reward guidelines. Alternative TP. For more aggressive traders, a secondary TP can be set at 0.5736, recent low, providing a risk-reward ratio of 1 to 7. Strategy 2. Range trading, scalpers. This strategy is designed for scalpers who want to capitalize on the choppy intraday range between 0.5846 and 0.5887. Long entry. Buy NZD USD when the price touches the support level of 0.5846 and the RSI 15-minute shows a bullish signal, RSI greater than 30 and rising. Short entry. Sell NZD USD when the price touches the resistance level of 0.5887 and the RSI 15-minute shows a bearish signal, RSI less than 70 and falling. SL for long, 0.5831, 15 pips below entry. SL for short, 0.5902, 15 pips above entry. TP for both, 20 pips from entry, e.g., 0.5866 for long, 0.5867 for short, providing a risk-reward ratio of 1 minute and 1.3 seconds. Strategy 3. Technical rebound. Contrarian traders, given that NZD USD is approaching oversold conditions, RSI equals 36.3954, a short-term rebound is possible. This strategy is for contrarian traders who want to capitalize on a temporary bounce. Entry: buy NZD USD when the RSI 1 hour rises above 40 and the MACD forms a bullish crossover, difference crosses above DEA. SL 0.5830, 15 pips below the recent swing low. TP 0.5887, intraday high, providing a risk-reward ratio of 1 to 3.2.5. Risk management for NZD USD intraday traders must adhere to the following risk management guidelines for NZD USD: position sizing, limit exposure to 1 to 2% of your trading capital per trade. For example, if your capital is $10,000, the maximum loss per trade should be $100 to $200. SL adherence: never move your SL. To increase risk. If the price hits your SL, exit the trade immediately to avoid further losses. Volatility adjustment: if NZD USD volatility increases, e.g., due to unexpected news, widen your SL by 5 to 10 pips to avoid being stopped out prematurely. Session exit: close all NZD USD positions before the end of the New York session, 9 p.m. Greenwich Mean Time, to avoid overnight risk. 3. Pair-specific analysis: AUD USD 3.1 current price and key levels as of 6:26 Greenwich Mean Time on April 20, 2026. Australian dollar to US dollar is trading at 0.7132, with a daily range of 0.7113 to 0.7157, a slight decline of 0.4745% on the day. Unlike NZD USD, Australian dollar to US dollar has shown signs of short-term stabilization, with the pair rebounding from its 100-day moving average, 0.6833, at the end of March and now trading above its short-term moving averages. Key intraday levels: GMT's support levels, 0.7113, intraday low, 0.7100, psychological support, 0.7080, 20-period moving average, 0.7050, 50-period moving average, 0.7000, major psychological support. Resistance levels: 0.7157, intraday high, 0.7180, previous swing high, 0.7200, psychological resistance, 0.7220, 100-period moving average, 0.7250, recent high. 3.2 Technical analysis: AUD USD's technical picture is more bullish than NZD USD, with the pair showing signs of a short-term uptrend after rebounding from its 100-day moving average. 1 hour time frame: Australian dollar to US dollar is trading above its 20-period, 50-period, and 100-period moving averages, confirming a bullish intraday trend. The Bollinger bands are widening slightly, indicating increasing volatility, with the price trading near the middle band, 0.7130. The MACD indicator shows a positive histogram, with difference above DEA, confirming bullish momentum. The RSI is currently at 58, approaching the overbought threshold, 70, but not yet in overbought territory, indicating that there is room for further upside. 15-minute time frame: the short-term trend is bullish, with the price forming a series of higher highs and higher lows. The 20-period moving average is acting as dynamic support at 0.7110, and the RSI is showing positive momentum, 62. A break above the intraday high of 0.7157 will confirm the bullish trend and open the door for a move towards 0.7180. 5-minute time frame. The intraday chart shows strong bullish momentum, with the price bouncing off the 20-period moving average multiple times. The RSI is at 65 and the MACD is in positive territory, indicating that the short-term trend is likely to continue. 3.3 Fundamental drivers for Australian dollar to US dollar today. Like NZD USD, Australian dollar to US dollar is not influenced by major Australian economic data today, so its movement will be driven by USD strength. A decline in the DXY below 98.00 will boost Australian dollar to US dollar, while a rise above 98.40 will weigh on the pair. Commodity prices. Iron ore prices are flat today, but any increase in iron ore or copper prices, key Australian exports, will provide support to the AUD. Global risk sentiment. Cautious optimism is supporting the AUD, as it is a risk sensitive currency. A further improvement in risk sentiment, e.g., positive news from US-Iran negotiations, could push Australian dollar to US dollar higher. Cross-spillover effects. Movements in NZD USD can influence Australian dollar to US dollar, as both are antipodean currencies. A rebound in NZD USD may provide a tailwind for Australian dollar to US dollar, and vice versa. 3-point for intraday trading strategy for AUD to USD. Market Meridian recommends a bullish bias for Australian dollar to US dollar today, with strategies focused on trend following and pullback trading, given the pair's positive technical momentum. Strategy 1. Pullback trading, trend followers. This strategy is designed to capitalize on the bullish trend by entering on a short-term pullback to key support levels. Entry. Buy Australian dollar to US dollar when the price pulls back to the 20-period moving average, 0.7110, or the intraday support level of 0.7113, and the RSI, 15-minute, shows a bullish signal, RSI greater than 50 and rising. SL. Place SL 15 pips below the entry level, at 0.6998, for entry at 0.7113, or 0.6995, for entry at 0.7110. TP. Set TP at the first key resistance level, 0.7157, intraday high, providing a risk-reward ratio of 1 to 3, 15 pips risk, 44 pips reward. Alternative TP. For more aggressive traders, a secondary TP can be set at 0.7200, psychological resistance, providing a risk-reward ratio of 1 to 5. Strategy 2. Breakout trading, aggressive traders. This strategy is for aggressive traders who want to capitalize on a breakout above the intraday high, confirming the bullish trend. Entry. Buy Australian dollar to US dollar when the price breaks above the intraday high of 0.7157 with a 5-minute close above this level, confirmed by increased volume, 20% above the 10-period average volume. SL, 0.71 for 2, 15 pips below the breakout level. TP, 0.7200, psychological resistance, providing a risk-reward ratio of 1 minute and 2.8 seconds. Strategy 3, range trading, scalpers. For scalpers, Australian dollar to US dollar is trading in a narrow range between 0.7113 and 0.7157, providing opportunities for short-term profits. Long entry. Buy at 0.7113, intraday low, with RSI, 5-minute, greater than 40. Short entry, sell at 0.7157, intraday high, with RSI, 5-minute, less than 60. SL for long, 0.7098, 15 pips below entry. SL for short, 0.7172, 15 pips above entry. TP for both, 20 pips from entry, e.g., 0.7133 for long, 0.7137 for short, risk-reward ratio of 1 minute and 1.3 seconds. 3.5 Risk management for AUD USD intraday traders must adhere to the following risk management guidelines for Australian dollar to US dollar: position sizing, limit exposure to 1 to 2% of trading capital per trade, consistent with NZD USD guidelines. SL adherence, maintain a strict SL to limit losses. If the price hits the SL, exit immediately. Momentum monitoring, if the MACD forms a bearish crossover or the RSI drops below 50, consider exiting long positions early to lock in profits. Session exit, close all Australian dollar to US dollar positions before the end of the New York session to avoid overnight risk. 4. Pair-specific analysis, NZD AUD 4.1 current price and key levels as of 6:26 Greenwich Mean Time on April 20, 2026, NZD AUD is trading at 0.9229. With a daily range of 0.9234 to 0.9244, a decline of 0.2594% on the day. NZD AUD is a cross-currency pair, no USD, so it is influenced primarily by the relative strength of the NZD and AUD, driven by monetary policy divergences, economic fundamentals, and commodity prices. The pair has been in a narrow consolidation range recently, as the RBA's more hawkish stance and the RBNZ's dovish stance have created a balanced dynamic. Key intraday levels, GMT's support levels, 0.9220, previous swing low, 0.9200, psychological support, 0.9180, 20-period moving average, 0.9150, 50-period moving average. Resistance levels, 0.9244, intraday high, 0.9250, psychological resistance, 0.9270, previous swing high, 0.9300, major psychological resistance. For point 2 technical analysis, NZD AUD's technical picture is neutral, with the pair trading in a narrow consolidation range between 0.9200 and 0.9250. 1-hour timeframe, NZD AUD is trading between its 20-period and 50-period moving averages, with the 20-period MA, 0.9230, acting as dynamic support and the 50-period MA, 0.9240, acting as dynamic resistance. The Bollinger Bands are narrow, indicating low volatility, with the price trading near the middle band, 0.9235. The MACD indicator is flat, with difference and DA near zero, indicating a lack of clear momentum. The RSI is at 48, neutral, confirming the lack of direction. 15-minute timeframe, the short-term trend is neutral, with the price oscillating between 0.9229 and 0.9244. The RSI is at 45, and the MACD is flat, indicating choppy trading. A break above 0.9244 or below 0.9220 will signal the next short-term move. 5-minute timeframe, the intraday chart shows very little volatility, with the price moving in a tight range. The RSI is neutral, 47, and the MACD is near zero, suggesting that scalpers should wait for a breakout before entering trades. For point 3 fundamental drivers for NZD AUD today, NZD AUD is driven by the relative strength of the NZD and AUD, with key drivers including monetary policy divergence, the RBA's more hawkish stance, interest rate at 3.6%, versus the RBNZ's dovish stance, interest rate at 2.25%, has created a yield advantage for the AUD, which has kept NZD, AUD under pressure. This divergence is expected to persist, limiting upside for NZD, AUD, commodity price differentials. Australia's key exports, iron ore, copper, and New Zealand's key exports, agricultural commodities, are both showing modest gains today, providing balanced support for both currencies. Economic fundamentals. Australia's economy is more resilient than New Zealand's, with stronger domestic demand and immigration inflows, supporting the AUD relative to the NZD, cross-spillover effects. Movements in Australian dollar to US dollar and NZD USD can influence NZD AUD. A stronger Australian dollar to US dollar and weaker NZD USD will push NZD AUD lower, while a weaker Australian dollar to US dollar and stronger NZD USD will push the pair higher. For intraday trading strategy for NZD KUD. Given NZD KUD's neutral technical picture and low volatility, Market Meridian recommends a range trading strategy for intraday traders, with a focus on scalping and breakout trading once the range is broken. Strategy 1. Range trading, scalpers. This strategy is designed to capitalize on the narrow consolidation range between 0.9220 and 0.9250. Long entry, buy NZD KUD when the price touches the support level of 0.9220 and the RSI, 15-minute, shows a bullish signal, RSI greater than 40 and rising. Short entry, sell NZD KUD when the price touches the resistance level of 0.9250 and the RSI, 15-minute, shows a bearish signal, RSI less than 60 and falling. SL for long, 0.9205, 15 pips below entry. SL for short, 0.9265, 15 pips above entry. TP for both, 18 pips from entry, e.g., 0.9238 for long, 0.9232 for short, providing a risk-reward ratio of 1 minute and 1.2 seconds. Strategy 2. Breakout trading, trend followers. This strategy is for traders who want to capitalize on a breakout of the consolidation range, which will signal the next trend direction. Bullish breakout, buy NZD AUD when the price breaks above 0.9250 with a 5-minute close above this level, confirmed by increased volume. Bearish breakout, sell NZD AUD when the price breaks below 0.9220 with a 5-minute close below this level, confirmed by increased volume. SL for bullish breakout, 0.9235, 15 pips below breakout level. SL for bearish breakout, 0.9235, 15 pips above breakout level. TP for bullish breakout, 0.9280, 30 pips from entry, risk-reward ratio of 1 to 2. TP for bearish breakout, 0.9190. 30 pips from entry, risk-reward ratio of 1 to 2. Strategy 3. Arbitrage trading, advanced traders. For advanced intraday traders, NZD AUD can be traded using arbitrage between NZD USD and Australian dollar to US dollar. This strategy capitalizes on price discrepancies between the three pairs. Arbitrage condition. If NZD USD to Australian dollar to US dollar, NZD AUD, sell NZD USD, buy Australian dollar to US dollar, and buy NZD AUD to lock in a risk-free profit. Arbitrage condition. If NZD USD to Australian dollar to US dollar, NZD AUD, buy NZD USD, sell Australian dollar to US dollar, and sell NZD AUD to lock in a risk-free profit. Note, this strategy requires fast execution and low transaction costs, so it is only recommended for institutional traders or advanced retail traders with access to low-spread brokers, like Meridian Finance Trade, which offers average spreads of 0.1 pips for major pairs. For 0.5 risk management for NZD AUD intraday traders must adhere to the following risk management guidelines for NZD AUD: position sizing, limit exposure to 1 to 2% of trading capital per trade, consistent with the other pairs. SL adherence, given the low volatility, avoid widening SL unnecessarily. Stick to the 15 pip SL for range and breakout trades. Volatility monitoring, if NZD AUD volatility increases, e.g., due to unexpected news from Australia or New Zealand, adjust your SL and TP levels accordingly. Session exit, close all NZD AUD positions before the end of the Asian session, 8 o'clock Greenwich Mean Time, if trading during the Asian session, or before the end of the New York session if trading during London and New York sessions. 5. Universal intraday trading guidelines and risk management regardless of the pair being traded. Market Meridian Finance emphasizes the following universal guidelines for intraday forex traders to maximize profits and minimize losses. 5.1 Risk management principles are capital preservation. The number one priority for intraday traders is preserving capital. Never risk more than 1 to 2% of your trading capital on a single trade. This ensures that you can survive a series of losing trades without wiping out your account. Risk-reward ratio, always aim for a risk-reward ratio of at least 1 to 2, e.g., risk 15 pips to gain 30 pips. This ensures that your profits outweigh your losses over time, even if you have more losing trades than winning ones. Stop-loss discipline, never move your stop-loss to increase risk. If the price hits your SL, exit the trade immediately. Emotions, fear, greed, should not influence your decision to stick to your SL. Position sizing, adjust your position size based on volatility. For more volatile pairs, like NZD USD, reduce your position size to avoid excessive risk. For less volatile pairs, like NZD AUD, you can slightly increase your position size, but never exceed 2% of your capital. 5.2 Intraday trading discipline. Stick to your strategy, do not deviate from your predefined trading strategy. Impulsive trades, e.g., entering a trade without confirmation, are a common cause of losses for intraday traders. Avoid overtrading. Do not trade every setup. Focus on high-probability setups that align with your strategy and the market conditions. Overtrading leads to fatigue and poor decision-making. Monitor the market, stay focused during the trading session, especially during high-liquidity windows. Sudden price movements can occur due to news or market events, so you need to be ready to adjust your trades accordingly. Keep a trading journal, record every trade you make, including entry-exit levels, SL/TP levels, reason for entering the trade, and outcome. This helps you identify patterns in your trading and improve your strategy over time. 5.3 Broker selection for intraday trading. Intraday traders rely on fast execution, tight spreads, and low transaction costs to maximize profits. Meridian Finance Trade is an ideal broker for intraday traders, offering low spreads, average spreads of 0.1 pips for major currency pairs, including NZD USD, Australian dollar to US dollar, and NZD AUD, high leverage, up to 50:1 leverage, allowing traders to amplify their exposure while keeping their capital requirements low. Fast execution, advanced trading platforms with ultra-fast execution speeds, minimizing slippage. 24 Fifths trading, access to the forex market 24 hours a day, 5 days a week, allowing traders to capitalize on intraday opportunities across all sessions. Advanced tools, charting tools, real-time market data, and customizable interfaces to support technical analysis and strategy execution. 6. Conclusion and key takeaways. Today's intraday trading environment for NZD USD, Australian dollar to US dollar, and NZD AUD is shaped by USD strength, monetary policy divergences between the RBA and RBNZ, global risk sentiment, and commodity prices. Our analysis reveals NZD USD bearish trend, approaching oversold conditions. Traders can use breakout trading to capitalize on further downside, range trading for scalping, or contrarian trading for a short-term rebound. Australian dollar to US dollar, bullish short-term trend, with signs of stabilization. Traders should focus on pullback trading to enter long positions, with breakout trading for aggressive entries. NZD AUD neutral, trading in a narrow consolidation range. Traders should use range trading for scalping, with breakout trading to capitalize on the next trend direction. The key to successful intraday trading is adhering to a data-driven strategy, strict risk management, and discipline. Traders should focus on high liquidity windows, avoid overtrading, and always prioritize capital preservation. By following the strategies and guidelines outlined in this report, intraday traders can navigate today's market conditions with confidence and maximize their potential for profits. Market Meridian Finance will continue to provide daily updates and analysis for these pairs, ensuring that traders have the most up-to-date information to make informed trading decisions. So please remember, stay safe all the time. I wish you have a happy trading. Please subscribe my channel and give me big thumb. I will see you in next video.